Good morning, good morning, good morning, everybody. I jollipies for my lateness. I was on my Adventures of Super Dad duties. You feel me? Way before Tim's Tidbit, it was the Adventures of Super Dad. And y'all know the adventures don't stop. Hey, before we get into it, I got to figure something out real quick. I was just talking about it because I always try to be nice to Alexa. And I think it's the Mitchell versus the Mitchells and the Machines or something like that. Spice, put it in the chat on what's name. I think that's it. I'm about to look it up. Mitchells Mitchells versus the Machines. That's it right there. That's the movie. Give me an image or something. That's it right there. The Mitchells versus the Machines. Yes. That's it. When they weren't being nice to the machines, and they were just telling them what to do without saying please or thank you. And then the machines turned on them. The Mitchells versus the Machines. Appreciate that, Spice. Yeah, man. What's going on, y'all? Since we already on the sponsor screen, y'all know what it is. Let's talk about our exclusive sponsors. And if it's this your first time pulling up, welcome. Let's talk about our exclusive sponsors since we got the sponsors up already. Let me get in my sponsorship voice. Today's episode of Tim Tisbit is brought to you in part by thenewtlr.com. That's right, thenewtlr.com, the place to get all your Spider Gang apparel and accessories. Go to thenewtlr.com so that you can let your boss and everybody else know that you have options. You buy them, you sell them. Thenewtlr.com. Our second sponsor on today is Banjo. New music by Il Jodam. Banjo, now streaming on all streaming platforms. That's Banjo. No new music by Il Jodam, now streaming on all streaming platforms. Thank you. Full disclosure, this is not a paid promotional advertisement. The new TLR.com, that's me. Banjo, Il Jodam, that's my son. Support my son's music. I appreciate when y'all pull up to the merch shop and be buying merch. Shout out to everybody that's been buying merch. I appreciate y'all. I've been seeing a lot of names that I know pull up in there and a lot of names that I don't know because y'all scream names different than your real names. But I appreciate y'all. It's not required for you to pull up and buy merch from me. That's not a requirement. I just did it. I made the merch shop called the cousin was like, hey, I like that saying on that shirt. Where can I get one? I was like, you can't because I made it myself. And they was like, well, you should make a merch shop. So I did. And I appreciate y'all for supporting it. But what I do require you to do, look me dead in my eyes. Look me, I'm going to get close. Look me dead in my eyes. YouTube, IG, look me dead in my IG. Go to YouTube so you can look me dead in my eyes. Look me in my eyes. I do require y'all to support my son music. He worked hard on it, and I'm proud of him. So go stream my son music. Banjo by Il Jodam. EELJODEM. And the album is called Banjo. Just like a banjo you play. BANJO. Banjo by Il Jodam. Go stream his music. He got other music up too. He got a few good songs, but I like Banjo. His last album he did is called Abstract. He had a couple good songs on there, but Banjo, I like this one. Go support my son music. Let's get into it, man. Oh yeah, let me get the pleasantries out of the way. If this is your first time pulling up, I like to say welcome. If it's not your first time pulling up, I like to say welcome. My name is Timothy Lee Rogers Sr. I still ain't wrote out no script, and I'm still freestyling this, so deal with me. I get on Al Gore's internet every single day and I talk about the price action. I started doing Tim's Tidbit by sharing everything that I learned about investing, trading, stock market, whatever you want to call it, with my friends and family. Then I started sharing it with people on the internet for the free 99. Why do I do it for the free 99? Because I want to help as many people as possible get exposure to the stock market. Let them know that we can do this. It is possible. It is accessible to people that don't have a whole heap of money, but they want to leverage their money and create generational wealth for their families in the future. It is possible, and you don't have to pay people for it. Everything you need to know about trading, you can learn on Al Gore's internet for free. All it takes is research, dedication, and then execution. You know what I'm saying? But I do it every single day to show people what a full-time trader would do in any situation. Because when you learn stuff, it's really good to learn stuff, but then what about the application? That's what I be telling people. What about application? When I be in Sunday school, Bible study, whatever you want to call it, it's real good when you're reading this right here. But let's talk about application. How does this apply to everyday life? That's it, man. So I just try to help people with the application by showing them what a full-time trader would do when he take a loss. What would a full-time trader do in this situation when it looked like the market for to do this, but it fake you out? What would a full-time trader do when he go on a hot streak? You got to know all of this stuff, man. That's why I do it every single day. I appreciate y'all. The only thing I ask you to do is hit the like button and support my son music. Hit the like button. Hit where it is on your screen. I don't care where it is. Hit the like button so that the algos are sending it out to more cousins. If you get anything out of the videos that I do, if you appreciate the videos that I do, feel free to subscribe. I don't care if you subscribe or not. I just want this to get to as many people as possible. So hit the like button. The algos like when you hit the like button. What's going on, y'all? What 100 up in here first today? 100. I know you ain't trading before Power Talk. Hey, Power talking right now. How long he gonna talk for? Like an hour? How long is he gonna do? Anybody know how long he talking for? Let me put my screen up. We gonna get right into it, man. Anybody who don't know about econoday.com. Oh, I ain't shout out my folk. Hold on, man. I'm tripping. What's up, 100? What's going on, Thomas? Exactly. Power got up early to drop the market. What's going on? We need to drop the market to offer some of that sell side. All we did was offer buy side all day yesterday. We got to offer some of that sell side. Michelle Tucker, what's going on, Michelle? Ladies and gentlemen, Angela Valdez, District Attorney Valdez is in the building. What's going on, Valdez? What's going? Cool it now. Hey, watch out. What's going on, man? Funny business to play today. Oh. What? Oh, y'all talking in the chat. Cool it, cool. Man, 100. If you ain't cool it, don't stop talking. I got to skip past all this. What's up, T. Baker? What's going on, Lover? What's going on, the father of legends? What's happening with you? What's going on? Spice says she 30 points up. 30 points up. In the back. Spice, go ahead and chill out for the rest of the day. Don't do nothing else. Don't get none of your money back to the market, Spice. What's up? I said here to learn to share. Gabriel. What's going on, Gabriel? Or Towns or whoever you want to be today. What's going on, Kirk? Kirk, I saw your name on the order too. I saw you on there. I saw Chris on there. Seawalk. I saw a couple people on there. I appreciate y'all. Now go stream my son music. What's up, Robinson? What's up, Lil Hulk? What's up, 2K Crypto? How Spyleen doing today? We gonna find out. What's up, Kareem? What's going on, Kareem? What's up, Fario? What's going on, Sonya? What's how you doing, Sonya? That's all the stuff I see in the chat, man. I see more numbers than I see names in the chat, but that's where we're gonna stop it at. Let's get back, get off my screen, 100. Let's go back to the chart. Powell 910. I wonder if they got like a link to look at it. Let me go to CNBC, see if they got a link to look at it. See what you're talking about. CNBC got say and by say ex-Trump. Oh, nope. They ain't got no thing up there to watch. Watch Powell. They got a thing up there to watch Trump. They usually have, they go Powell right there. Fed chair. Powell speaks.
So
I'm gonna put Powell in the background.
Which was close to peak monetarism, and there was quite a focus on monetary.
I'm gonna put Powell in the background while we talking.
So to go to this current situation, so as part of our response to the pandemic, we did resort to large assets to address what were pretty severe disruptions in markets.
Is Powell too loud? Y'all let me know if Powell too loud.
Our balance sheet expanded dramatically.
I'm put Powell back there while we talk.
Our purchases of securities don't actually increase the quantity of government obligations held by the public. They really change the mix because we issue bank reserves.
You know what? I ain't gonna be able to put Powell back there while we talk.
You know, the quantity of obligations. That is not to say that
I can't put Powell back there while we talk because I can only share one screen at a time.
In 2020, and then
I can
slowed
put him
down
up there,
in
but y'all
21, and
won't be
now
able to hear
now
him.
it's quite sluggish. And I guess I would just say it this way: whatever caused, there are different theories on what caused the inflation so suddenly jumped up out of the ground.
Get out the way, pal.
Whatever that cause was, the relationship between the money supply and inflation, economic output, has been much more unstable than it was in Friedman's day for a very long time.
Okay, we're pushing down. So overnight, we ain't do nothing but consolidate. As y'all can see, we just can these 15-minute candles. Let's go to hourly candles real quick. So this is the run up. Yesterday, when I we need to come back and offer some of the sell side. We got we consolidated all night long. We set an overnight high of 39.96. We had set an overnight low of 39.69.75 that I marked this morning. But as y'all say, we've already taken that sell side. Now we're down here in a 1 hour imbalance right here. We're right here in a 1 hour imbalance, right? It's a bullish imbalance, a bullish fair value gap, however you want to call it, right? We made it on the way up, right? So we got one more 15-minute fair value gap right there that I had marked out that I was watching to see if the algos really want to get down and get that to push back up. Because looking at this run, it's looking like this fair value gap may be sitting around equilibrium, but let's check that out real quick. What I think I'm gonna do today, we're just gonna look at, it's just above equilibrium. That 15-minute fair value gap is just above equilibrium. We don't have any. Let's drop down lower to see if we got any. We don't have any 60-minute fair value gaps above this breaking structure. Besides this one here. So let's drop lower and see if it's in the 15-minute fair value gaps. What I want to do today, instead of just talking about the price action like we usually do, I want to open it up and talk about whatever y'all want to talk about. So whatever y'all want to talk about, start putting it in the chat right now. Like whatever you want to talk about, I don't care. Just start putting it in the chat right now, because we come do the price action every single day. Okay, we got a nice little consolidation right here. We got a 15-minute order block right there, potential order block here. This red candle there. We got a potential 15-minute order block, and then we got another one right down here at this fair value gap there. So that's why I marked this fair value gap out there, because it's like we could get back to this. We can get back to this order block right here. This fair value gap and this order block here, and that'll put us real close to equilibrium. If the bullish momentum will continue today, this would be a nice spot to go long from. If we get down to here, before popping back up, if we don't pop up off of this 60-minute, I will be taking a long off of this fair value gap right here to take it back up. To see if this bullishness continue, because Powell is talking now, and we still haven't tanked. So we just pretty much came back down to get this this business over here. Let's look at the job numbers. What the job numbers look like? What the job numbers good or bad? What the job numbers good or bad?
It comes down to is nominal income targeting the best way to promote that? We don't think it is. I don't really think it is. And part of that just is that it would be, I think, very difficult to explain to the public.
If you don't know how to use economy.com, you just come there, and if after the event didn't happen, it'll say report. Prior to the event happening, it'll say consensus. And the only difference is once you hit the report, there's a column in there that says actual. Prior to the event happening, you just have the consensus stuff, the outlook, what they're expecting. So the job numbers, they was expecting 240 people to apply for unemployment for the very first time, and it came in well under. They expected it to be at 240, right? But it came in at 222. So that's a good thing. That's a good thing. That means less people are applying for unemployment. That means that the job market is staying strong. And as long as the job market stays strong, the feds are not gonna ease up with pushing this rate hike stuff. So, you know what I'm saying, depending on how you look at it, you know what I'm saying, like strong job numbers, the Fed's not gonna ease up. You know what I'm saying? So it look at, okay, it's how do you feel? Do you feel like the market already expect the Fed not to ease up? So the market already got that priced in and it's gonna continue to try to rebound? Or do you think the market gonna be like, okay, the job numbers good, the Fed not gonna ease up, and then the market actually try to tank? It's like it depends on what mind frame you in, and it's all about start to watch what narrative that they paint. You know what I'm saying? Just watch the narrative that they paint. Don't anticipate nothing. Just react. That's what I do. I react. I have my plan for if it tank and if it take off. Let me do it like tank or take off. Y'all got to see my hands. When I do that, you can't see my hand. Okay. Now with that being said, if we get down to that fair value gap, I will be taking me a MES sim trade off of that fair value gap right there. If we get down to it without taking back off first. If we take off first, then no bueno for coming down to this one and going right. And the only reason why I'm not taking it off of this 60-minute fair value gap is because we got this 15-minute fair value gap down here. And that's close to equilibrium, right? That's close to equilibrium. All right, the market getting ready to open in 2 minutes. So for the folk that just want the levels, I'm looking at the liquidity at 39.41.50 to 39.45.50 in that fair value gap on the sell side, right? I'm looking at that as a target to go long off of. You got more liquidity 15-minute wide, like all this is 15-minute candles. On the 60-minute, the only liquidity I'm looking at on the 60-minute is all the way down here at the bottom of our box, right? At 38, is at 38.83.50, right? 15-minute wise, I'm looking at this fair value gap for liquidity, a liquidity run. If we get down to that, like I say, between 39.41 and 39.45, got another little piece of it up under this swing low right here at 39.31, right? Anything under that, I'm just looking at the bottom of the box. I do not see it going down there today. It can, but I do not see it going down there. If it wants to go down there, let it go, right? But I'm just waiting for it to get right here so I can try to take me try to buy it off of this fair value gap right here. Because I'm in the mindset of, I think the algo's trying to get up here to this 40.19. The way we took out all of this liquidity yesterday, right? And we got up past this price leg, right? And stayed up here and consolidated, right? Let's see what we consolidated at. I think we checked that yesterday. I think we was at equilibrium for our entire box. If I can get it on the right low, I mean the right high. Yeah, we consolidated right at equilibrium for our entire box. We checked that yet. Oh, there we go. We getting down there. Hold up. We pushing down now. I'm gonna go half of the box. Wait a minute. Let me see how big that box is, because I only got a 5-point stop loss. What's the bottom of that box? 41. I'm gonna go to. I ain't got a big stop loss, so I'm gonna go to the bottom of the box. Oh, let me make sure I'm on sim now. I'm supposed to be simming. Yes, I'm on sim.
I mentioned a couple of times our fully discretionary system, and one of the biggest of those concerns is that in the face of
41, 39, 40, 50. I do 75. I put it on 50, but I do 75. All right.
Doubling it again during
That's what I'm looking for. What y'all want to talk about, man? Oh, we ain't even check with Spylene. Hold on before I see what y'all want to talk about. Oh, they asked Powell where you want to take the balance sheet over time. Let me see how I'm gonna see how he answered this. Hold on.
Sure. So in the last cycle, after we ended our asset purchases, we froze the size of the balance sheet in 2014, and then allowed it to
froze the size of the balance sheet
relative to the size of the economy for about 3 years. So as the economy grew, the balance sheet didn't grow. Then in 2017, we began to allow maturing assets to run off, and that process went on until 2019. By the end of that period, we had a balance sheet that was significantly smaller relative to the size of the economy and smaller than it was overall. So then we resumed asset purchases, as you know, 2020, and once again now we are embarked on shrinking the balance sheet, and the test will be back to levels that satisfy the public's demand for our liabilities. That's currency and reserves and things like that, but also with reserves maintained at levels that are consistent with our ample reserves regime. So the balance sheet is substantially larger now, obviously, and consequently the runoff process is designed to be substantially faster than in the last cycle, to the tune of on the order of $1 trillion.
If I would have took it, I said I was going to go 50% of the fair value gap. If I'd have took it at 50%, I would have been, I'd have had my 10 points already, because it just went all the way back up.
The plans are spelled out in detail on our website around the January and May meetings. And of course, one thing we always say is that we're prepared to adjust the details of the plan based on economic and market developments at any time. As far as returning to a scarce reserve regime, I guess I would say that I think that our current operating framework is a better one, and I don't see a case for returning to scarce reserves. Now, why is that? So the world has really changed as a result of the global financial crisis and the pandemic. The scarce reserves,
Powell being Powell with all that, with all that talking around. Central banks may need to rely on, man, say something. But anyway, like I was saying, it already bounced up. I just looked at it. It had already bounced up to 51.75. I would have been out already. I would have it would have my 10 points would have been done already. If I took it off the middle, when I was like, I'm gonna take it off the middle of the fair value gap, and then I was like, wait, I ain't got a big stop loss, so I said I'm gonna take it off the bottom. If I just took it off the middle, it would have been out, because it went all the way back up to 51.75, and then it pushed back down. So I would have been out already. But let's see how it play. I'm gonna leave it there to see how it play out. Anyway, what y'all want to talk about, man?
I remember the first year I read an op-ed in the Wall Street Journal advocating for that digital currency, and I was kind of horrified.
Good morning. Said so in a letter to the editor. Since then, the Fed has formally. Oh, I need to go past all of this.
And digital currency's obviously been a.
I need to go past all this. Fadio. Appreciate that, Kurt. Good morning, prayer kid. Yo, man. Let me come off screen real quick. Hey, man, I was looking at the other night when we got off. I can't remember what night it was, but when we got off, I peeked at the chat and I seen that Robinson said that he had lost his dad last week, man. I apologize for missing that the other night, but sorry for your loss, bro. Just prayers to you and your family. I lost my daddy back in 2002. You know what I'm saying? Yeah, man, I'm sorry I missed that. Prayers for you and your family. Oh man, I appreciate that, man. I'm just a dude from Fort Lauderdale, Florida. I'm just saying it in a way that I understand it. I appreciate the fact that you understand it. They understand it the way I say it. Marky gonna tell us what Powell said. What's going on? Oh man, look at that cutie right there. What's going on, Cameron? How to recognize accumulation, manipulation, and distribution. Let's get into that right now. That's a good one.
In our own paper, we suggested that the CBDC in our jurisdiction.
Put this on full screen real quick. Okay. How to recognize accumulation, manipulation, and distribution, right? So when you like accumulation is nothing more than like consolidation, right? So that's the easiest one to recognize, right? Here we go right here. This is a perfect example right here, right? So accumulation, right? That's the consolidation area, right? So this area right here, these 15-minute candles, by the way, right? You can recognize it on all time frames. It's the same thing, right? So we got accumulation, so we consolidate all night long. Let's see what time this is. This is the close. This is the close on that day. I don't have my thing up, so I can't see it. So I'm not going to be able to expand it all the way out. I need to be able to see my dates. So here we go. This is the close on the first, right? This is the close on the first, right? So then we consolidate all night. That's Thursday, I believe. Yes, Thursday. So the close on Thursday right here, right? And y'all only hear me, right? Y'all can't hear Powell talking because Powell getting on my nerve. Y'all can't hear Powell, right? Somebody put in chat. Can y'all only hear me? I grew up on the deep side, so deep side all day. You feel me? I grew up on the deep side, so deep side all day. Well, I ain't gonna say I grew up. I lived on the deep side. I grew up in Parkway, but I never stayed on the shallow side. I always lived on the deep side, so deep side all day. Where's that? Okay. No Powell. Okay. All right. So this is the close on the first, which was Thursday, right? So then we consolidated all night, right? Right. We consolidated all night. That right there is the accumulation, right? That's the accumulation. We consolidated all night, and then right here after the 8:30 time frame, right? After 8:30 is usually like news time. You know what I'm saying? It's usually around, you know, I don't know if we had any news on that day, but that's usually around the news time, right? And then right around that 8:30 time going into the New York, right? Into the New York morning time, right? Here we go. Boom, with the manipulation. That's the manipulation, right? We come into like the news time in the New York Open, right? That's the manipulation. Boom, what we do, we take it up, right? And it's the manipulation because it fool you to think, oh, we about to rip, we about to run. Look at this move. Look at this move up. We came up and we tapped into these highs right here. We went up, went down, went up. It set up beautifully, make you think it's fun to run. Let's open it up a little bit so you can see that. Let me slide over here and see what's going on with this. Look at this right here. If I would have took, see it's at 52 right now. If that's the second time, if I would have taken it off of the because that's right at 10 now from where we at now. So it wouldn't have been my 10 points yet. Because 50% would have been roughly 43, 50. So it wouldn't have been the 10 points yet. Okay. So let's come back over here what I was saying. All right, so it set up beautifully to make you think we was from the blast off, right? So we consolidated when we got here around news time. This the news time. We went up, you know what I'm saying, made a fair value gap. We pushed up, came back down to that fair value gap at the breaking structure, and we went up, you know what I'm saying, hit it, ran this above these highs and consolidated up here above these highs over here, right? So that was the accumulation. It accumulated all of these long positions, right? It accumulated a bunch of long positions and took off to the upside. That's the manipulation, right? Right. And then here's the distribution. What comes next? God dog it. hate when it does this.
including digital innovation.
There's the distribution. Hang out. You see how it just dropped off? Heavy distribution. You see what I'm saying? Non-stop sell side on the 15-minute. Heavy distribution. So that's it right there in the classic sense, right? The accumulation is the consolidation area, right? The manipulation is when they take you to the wrong side, make you think we from the blast off. So it was taken to the wrong side. Some people in here, if you was a scalper or a day trader or had like a smaller profit target, you did well in there. But if not, if your target was like up here somewhere, you got caught up in that manipulation and they took it off straight into distribution. You see what I'm saying? Because the real target was down here. This wasn't the real target. So that's the accumulation, manipulation, distribution right there. How to recognize it? The manipulation, you only personally, I can only recognize the manipulation after the distribution. You know what I'm saying? Because it's like once I see it, I'll be like, okay, this the real move, this the real direction, right? And the only way to really stay on the right side of it is to know the higher time frame target, right? Know the higher time frame target, and that's how you don't get caught on it. So let's go to the higher time frame and look at it. This appears that it don't want to come back and get me, so I'm just going to take this order off. I'm not going to leave it there. It don't want to come get me. If I would have took it at the it's at 66 right now. So if I would have took it at the middle of the fair value gap, like I said the first time, it would have been a successful trade. Because I had a smaller stop loss and I hadn't really planned it out real good, I just went to the bottom because I didn't know how wide the box was, how wide the gap was. But it is what it is. It was a sim trade anyway. Live to trade another day. Okay, so the way not to get caught on the wrong side of the manipulation and distribution is to know the higher time frame. Like looking at this time frame right here. This was the first right here. Okay, so it was back here. So the chart would have looked like this, right? So looking at the time frame, we come here and we went there and then we closed, and then the next day we was going to the next day after this right here. Boom. So it's showing the full day. I'm trying to get it to where it won't show the full day. Let's try 4 hour. Let's try 4 hour. Okay, before the drop. All right, boom. We're going here. All right. So there we go. Trying to give us some this was the overnight accumulation, right? So boom, these 4 hour candles, right? So we close, we consolidated overnight. This the consolidation overnight. Right there, 6 o'clock. Okay, boom. Here we go. This is the 10 o'clock candle. This is when we started pushing up right there. Boom. So we consolidated and we started pushing up, right? The way we wicked off of this right here, we came up here without taking these highs and wicked off that, right? That could be like a tipping of the hand, right? Now that we know what happened, it's kind of hard not to be biased, and it's kind of hard not to just make everything look perfect. But whenever you see, like from the higher time frames, when you see the higher time frames failing to push higher and they, you know what I'm saying, wicking down like that, it can start to tip your hand to like, maybe up here is not the target. Maybe we want to keep going down some. This could just be a retracement, because if you look at the where we have put in that right there, we just, as soon as we came back into a premium market, we wicked down. You see what I'm saying? We came back to premium, failed to get this high, and wicked down. The seller sell at premium, the buyer buy at discount. So you expect it to be big green candles down here. Like when we came down here, you expect anything under here, people to be buying, right? From this red line down, because it's in a discount market based off of this low right here, right? Soon as we got back to the premium, we wick down hard. That could be a telltale sign. And again, where do we wick back down to? Right back to equilibrium for the overall big move, right? That could be a telltale sign like, hey, it may be some more downside. So you'll be watching for stuff like the manipulation, right? Just to be expecting it. And I ain't gonna hold you like, oh, I knew this was coming. I knew that was gonna happen. But since you saw it wicked off the first time, right? When it come back up to those highs, see how it just kissed them highs, made equal highs, and then sold off, because it was like right in this time frame, I already showed you. When it came to this premium, it sold off hard. That could be a way of the market tipping its hand. You see what I'm saying? We consolidated, right? And we manipulated. We went up, but we came down hard, right? So that'd be a sign, oh, this may be some manipulation. Because when we came down really, really far into a discount. It wasn't like when you going up, you know what I'm saying? You come back down to just a little 62% retracement. When we came back, let's see how far we came down on that right there. I know I'm spending a lot of time on this, but it'd be a lot more complicated than just, oh, that's just it.
For example, if we're moving to a world where
before the big fall,
more frequent, larger, and more persistent.
Okay, so before the big fall, look how far we came down from this run up right here. You see the run up? This is the accumulation, right? We know later that this is the manipulation. But when we went up, right, hit that 62% retracement, right? This is the hourly candle that gave us that 62% retracement, right? And we came back down, right? When this candle opened up, look how far into this run that we came down, right? We came way down and pushed up and then wicked off of it hard again. You see what I'm saying? We came up, wicked down, came up, wicked down. All that right there can be a telltale sign that this is just manipulation. But it starts with understanding the higher time frame bias. And I ain't gonna hold you. A lot of times I be forgetting the higher time frame bias. That's why I be putting all these little boxes on here to remind myself what I'm looking at. Because when you start dropping to the lower time frame, sometimes it's easy to get lost in the sauce. So I just put the boxes on there to remind me. I know I ran my mouth a lot on that, but hopefully I was able to help. DXY near hourly imbalance. I don't trade DXY, but is that a question? Is that a question or just what's the name? If that's a question, we'll go look at it. How many ticks do you usually risk, or it depends? Right now, I just got a basic setup that I'm sim testing. It's a 2-to-1 setup. I'm risking 5 points to make 10 points. That's it. That's I'm sim testing that. That's what I'm gonna go live with after I do all my sim testing throughout the month of September to like get my day trade in mind back into excuse me, I ain't make no breakfast in them. Bourbon got the hiccups. And when I get my I'm trying to get my day trading mindset back. That's why I'm just sim trading for all of September, trying to get my, because I still think in terms of longer term. I still think in terms of swing trading. But right now, I just got one set up. It's a 2-to-1 setup, risking 5 to make 10. Risking 5 points to make 10. So that's 20 points. I mean 20 ticks to make 40. 20 ticks to make 40. That's my setup. That's the base setup. But prior to, it would depend on yes, that was the entry. That was the entry for me. The middle of the fair value gap was the entry for me. I should have went with always go with your first mind. I don't know if y'all paid attention. I said I'm gonna go off the 50% of the fair value gap. Then I was like, whoa, wait a minute. I got a small stop loss. I'm just gonna go with the bottom. Went with the bottom of the fair value gap and missed it. Always go with your first mind. Next question. Tim, September 22 is coming to an end. How do you check volume on 9/22 versus 12/22 contracts? You can do that on bar chart. I think it's bar chart. I believe it's bar chart. I haven't done it in a while because I really don't care. I just wait for it to roll over. I just wait for it to tell me to roll over. And let's go. You go to bar chart and you look right here. You go to bar chart, put in the futures contract you want to see. Just put in like it's gonna show you the current one. You is the current one right now. But if you just go to ESE mini, right, and then scroll down and it show you like the different expirations down here, and it show you how much volume is on. It's usually one that show you open interest too. Is it under all futures prices? It was one way it can show. Okay, yeah, open interest. There you go. If you click on future prices, what was that I clicked on? I clicked on all future prices. Sound like Powell stopped talking. He did. So and it'll show you like all the expirations. And so right now, the December contract got like 140,000 open interest. The September contract got 2.1 million open interest, and then the volume still heavy in the September. This intraday. Hold on, let me change it. End of day. All right, boom. So end of day, that intraday show you like the intraday volume. The end of day show you like the overall volume of what happened at the close of business, the close of the prior day. So prior day volume on September's was 1.8 million. Prior day volume on December was 87,000. Open interest on December is 117,000, and open interest on September is 2.1 million. So the bulk of the volume is still in September contract. The bulk of the volume won't roll over to the December contract until it's time to close. Oh, my battery dying on IG. My battery dying on y'all on IG. Go over to YouTube. I ain't got my charger. It probably won't start rolling over until they start making you roll over, getting closer to like the monthly expirations in the quad witch and all that right there. When they start have to roll over, that's when the bulk of the volume gonna start changing over 9 times out of 10. Good morning, DeAndre. I appreciate you, man. Sorry to hear that. I appreciate you. Okay then. Let me see what else y'all got. No power. It's very faint. My wife from Deep Side. Okay then. Don't trade DH White. Either moves inverse to ES. Oh yeah. The dollar. We was talking about that a little bit yesterday. Talking about how the dollar, when the dollar be strong, it make it hard for like the equities in the businesses and stuff like that to really rally higher when the dollar be strong, because it's like, you know, a strong dollar hurt companies that get the bulk of their money from overseas. Because if the dollar strong, then they money weak. And if you get the bulk of your money from overseas, or a good portion of your money from overseas, that's gonna hurt you when the dollar be strong. When the dollar be strong, it help companies that get the bulk of their money in the US. Hey, I don't see no more questions in there. I guess y'all don't want to talk about nothing, man. I appreciate y'all for pulling up. Oh, we didn't even look at Spilene. Did we look at Spilene? We didn't even look at Spilene. We can't do that. We can't do that. Y'all sing it with me now. Spilene, where you at, baby? Here I go. There she go. Hey, Spilene, I jolly pies, baby. I jolly pies. I truly do. And I really wish I really wish I would have took that sim trade off of the 50% of that fair value gap, like I was supposed to. Like I would, y'all, man. Let me put it back on the screen. Look at it. Y'all see this, right? Somebody come look at this. Somebody come look at this. I'm gonna go back and look at this video to make sure I said out loud. I'm gonna take it off 50% of the fair value gap and then talk myself out of it. If I talk myself out of it, I'm gonna be mad at myself. Because I was thinking it. I don't know if I said it. I was thinking it. I was like, I'm gonna take it off 50%. Then I'm like, oh, wait, I got a small stop loss. I'm gonna take it off the bottom. I was thinking it because I didn't know how big the gap was. Yep. Because the gap was 41. And then if I did at 43, then that only left me 2 points. Yeah. Yep. Because I remember, yep. I was like, because I got a 5-point stop loss. Yep. Always follow your first mind, people. Y'all seen it here first. Always follow your you took it. Shout out Robinson. Shout out Robinson, say I took it. Shout out Robinson, say I took it. Oh, for sure. For sure. I'm gonna take a screenshot and journal it. I'm gonna take a screenshot and journal it. I'm about to go eat me some cereal, man. I appreciate y'all, man, for pulling up. Hey, Timothy don't have it's bye week for it's bye week for the varsity team, so he don't have a game this Friday night. So we gonna be able to daddy ain't raised no fool. I feel you. Hey, we're gonna be able to do our weekly wrap up this week. It's a bye week for the varsity, so he don't have no varsity game this Friday night. So we ain't been able to do the weekly wrap up in a while because it's been Friday night lights with football. So we gonna do the weekly wrap up this week. Remember, if you're new here, remember when you pull up on the weekly wrap up, you got to pull up and talk about what you learned, what you did right, what you did wrong. If you was undisciplined, you know what I'm saying? You got to pull up ready to put it in the chat. Y'all been slacking on me lately. Put it in. Y'all have been putting it in the chat. We done had a break. Oh yeah, I'm glad you said that. I got to look into that. I got to look into that for Water Music. Yeah, you right about that. I appreciate you for putting that back up though. I'm gonna tell him to do it. He like, hey, this his music. I can't do everything for him. I'll be out here trapping for him hard. I'll be like, hey, Spider Gang, support my son music. I don't even see him trapping for himself. You know what I'm saying? He got a notification the other day. I got an email that came because he signed up like all the Spotify and the other Tidal, Spotify, all that. It go to his email, but for some reason, Apple Music come to me. Like all his streaming information by Apple Music come to me. I don't know if they recognize like when he signed up that it's under like the same login as me, but I sent him the email yesterday. It was talking about his streams and how it's doing and like all the main states that's listening and all that. All this what you call it? We used to call it the BBS data. Back in the day, we called it the BBS data, but whatever they call it now, I sent it to him. He over there, yeah, free out there, y'all do it. You better get out there and start trapping. Your daddy can't be trapping for you forever. Hey man, I'm about to go eat me some what I'm eating today. I'm probably gonna eat some honey bunches of oat. Hey, I checked out this series called A Devil in Ohio. That was pretty good, man. It's on Netflix. Y'all check that out if y'all get a chance to. A Devil in Ohio. I hate I didn't get into that trade. And then I hate I didn't have my platform open so I could have got me an SPX call. Man, I'm gonna start doing this right. I'm gonna start getting off at 9:30 so I can get ready to trade, man. I'm gonna start cutting y'all off at 9:30. Birthday day coming soon, Virgo gang. 9/13. That's what's up, man. Happy early birthday. Hey, Hey, whatever y'all gonna do it safe, man. If y'all gonna trade today, trade safely, trade wisely. I appreciate y'all for pulling up. I see y'all for the price action recap. Again, for the price action recap, I think I want to do the same thing. Like whatever y'all want to talk about, think about it throughout the day, and then pull up and ask it, cause you know it get a little redundant just talk about the price action over and over and over. And I just try to sprinkle in different things the way I see it to kind of help, you know what I'm saying, illuminate things for people. So if you got anything you got a question about it, anything that you know what I'm saying, not really all the way there with, ask the question. And if I can shed some light on it, I will. If I don't know, I'm just gonna say, man, I don't know. I appreciate y'all for pulling up. Oh, that's your birthday, DeAndre? Happy early birthday. My nephew birthday, the 25th, September 25th. Yep. That's my sister oldest son. Matter of fact, that's her oldest child. My sister oldest child. He'll be I can't remember how old he's gonna be. He 30 something. He 30 something. I can't remember exactly how old he is, but his birthday on the 25th. Hey, I appreciate y'all, man. I see y'all tonight at 7:30. Remember, come with your questions if you got any questions. I want to just talk about whatever y'all want to talk about today. That's what the day dedicated to, whatever y'all want to talk about. See y'all at 7:30, man. Gone.